One thing is clear. Tesla has seen a very rough couple of days following its Q2 earnings. Now, as we seen on Friday, the loss has gotten smaller, and you actually seen a nice bounce from the lows of the day Friday. I think there's a reason for this, and I think this upcoming week for Tesla specifically could be a big one, and it could be very important because let's face the facts. Earnings were good. There wasn't anything to be concerned with. And this catalyst, in conjunction with good earnings, believe it or not, earnings were good, can be a massive win for Tesla. And it has to do with increasing demand and lower interest rates. This is one of many reasons why Dan Ives just raised his price target from $300 per share to $350 per share. And we have his latest take on Tesla stock, in which, get this, he believes Tesla could rally to a $2 trillion market cap in potentially 6 to 12 months. You're talking $640 per share. So let's go ahead and get straight into what Dan Ives has to say about Tesla stock. If you guys want to stay up to date with everything going on every single day with Tesla as well as the broader markets, hit the like button as well as subscribe to the channel, and let's get straight into it.
Welcome back to the watch list. I'm Caroline Woods in for Nicole Petalides. Let's talk Tesla. And when we talk Tesla, we of course talk to Dan Ives, Managing Director, Equity Research at Wedbush Securities. Dan, happy Friday. Good to see you. Thanks for joining us.
Happy Friday to you. Great to be here.
All right. So, Dan, Tesla shares took a beating after earnings, basically flat today, but down about 6.5% on the week. Yet you raised your price target after earnings. So what has you so upbeat?
A lot of your bearish firms raised their price targets as well. Not to mention the bullish firms, which also raised their price targets on Tesla stock. This has been a theme after Tesla's earnings. A lot of price target increases.
And what has investors so downbeat?
Yeah, I mean, Carolyn, we've talked about this before, me and you. This is just what I view as the second inning of a 9-inning game for Tesla. And I think ultimately now you're starting to see demand stabilize and I think ramp, especially in China and the US. Prices, now look, Musk didn't take off any more price cuts, which why the stock knee-jerk got hit a bit. But they're
That's important. That's what caused Tesla to fall with their earnings call, is because Elon didn't totally unrule price cuts in the future. He kind of made it seem like we won't get price cuts as long as things stay the way they are, but he didn't completely rule that out. And that's the only reason why Tesla has fallen since its earnings. Earnings themselves, again, were much better than expectations, in which Tesla typically gives us better earnings than expectations. So that was somewhat to be expected from Tesla.
They're not going to put their back against the wall. And I ultimately believe 95 to 98% of price cuts are in the rearview mirror. And now you start to get that sum of the parts story, from superchargers to AI/FSD, talk about the OEM that they're in talks with, to battery technology. And I believe this is a stock that continues to go higher despite this knee jerk after what's obviously been a parabolic year.
We're going higher, baby. Dan Ives confirmed it.
But Dan, you were already, of course, bullish on Tesla with a $300 price target. You bumped it to $350. What specifically stood out to you from this earnings report or from the earnings call that warrants a $50 price target bump?
Yeah, I think ultimately it's really become the autonomy of electric vehicles in terms of everything that they're doing, because now from a valuation perspective, it's some of the parts. It's not just from a demand, from an auto, from a delivery. I view now you start to add what the battery technology could be, what superchargers could add, and ultimately the drum roll. And I believe this is how you get to $1.5 trillion, $2 trillion market cap. It's FSD AI. So I view stock selling off knee jerk. I view that as sort of table stakes relative to where I see the stock going over the next 6 to 12 months. And I think yet again, over the coming months, the bears will go back into their caves in hibernation mode.
So $1.5 trillion, to put this into context, is about $450 per share, $470 per share, in that range. $2 trillion is around $640 per share. Now, this licensing of full self-driving and the AI story, this is so big because if you're in the markets to buy an EV, or really any vehicle for that matter, as we go over the next, coming months and years, people are going to look for that full self-driving software. Once it becomes more known about, more talked about, maybe I should say. And when you're buying a vehicle, it's a multi-year commitment. And if you're a manufacturer like a Ford or a GM or Toyota or anyone else that just doesn't have anything full self-driving related, well, that's going to start hurting potential sales at those companies. Now, 5 to 10 years from now, you're going to have a software that is full self-driving. Now, just like we've seen with the partnering of superchargers from Ford, GM, and so many other automakers at this point, well, it was a lot cheaper. It was a lot better of an alternative to just partner to use Tesla's supercharging network. But licensing of full self-driving could make more sense for legacy automakers to partner with Tesla on, because it's almost impossible for a Ford or a GM at this point to actually make their own full self-driving software. Sure, they've trained specific vehicles and models in specific cities, but you can't train your vehicles in every city separately. I mean, that's never going to happen. What Tesla has done has taken the long approach, and that long approach has taken a long time, right? Because they're using all of their cars that are out there, using FSD, training the software at the same time. Whereas obviously a Waymo or something is easy to train one particular city, but you can't leave that city and go use the software. That becomes a big problem later on down the line. And Elon confirmed on the last earnings call that they're already in talks to license full self-driving. Let's break down the numbers here and why this could be such a big opportunity to potentially license full self-driving. Now, Ford is the first company that comes to mind, or at least came to mind, when I heard Elon talk about this on the earnings call. Now, Ford sold 4.2 million vehicles worldwide. I'm only going to consider the 2.3 million vehicles that were sold in North America. And if I want to be conservative here and say about 25% of these vehicles would have full self-driving in them, would have licensed full self-driving. Now, it's probably going to be cheaper. It might be subscription, so some of these variables might be unknown. This is only a rough estimate to what this could do for Tesla's EPS and why this could rocket Tesla stock. So that would be about 460,000 vehicles that would get full self-driving. Let's say one way or another, it's $3,000, just to be conservative. That is $1.4 billion for the year, essentially, that Tesla could make. Now, this is 90% net margins. So times this by 0.9, you're at $1.25 billion of net profit that you could see just off of one deal to license full self-driving to Ford. And these are very conservative numbers. It could be more than 3,000. It could be 5,000. It could be 10,000. It could be 7,000. Those are probably better numbers to go with, but I like to be a little bit more conservative. It could add over $1 billion to the bottom line. That's quite a bit. So if Tesla did strike a deal with Ford to put full self-driving in Ford's vehicles, considering only a 25% FSD take rate from Ford vehicles sold in North America, with full self-driving costing $3,000 per vehicle, with a net margin of 90%, because it's software and that's what the margins are, that could potentially add $2.53 to Tesla's EPS. Why this is such a big deal is 2024, analysts are only expecting $4.76 of EPS. This would be more than half of EPS. This would be a 50% EPS boost off of one partnership alone with very conservative numbers. So it's one of those things where you almost have to partner with Tesla, and the sooner you do, probably the better. I don't think Elon would have announced that they are in talks to license full self-driving with one major OEM if they were not really in some deep conversation. My opinion. Now let's go ahead and continue on with what Dan Ives has to say.
What is the opportunity in licensing FSD? Because I know you're bullish on that, you just mentioned it, but what's the end game there? What could that look like?
I think that could ultimately be even bigger than the opportunity that we've already seen in Tesla the last decade. Because of the software.
Bigger than what we've seen in the last decade? Oh boy.
Based opportunity on FSD. And I think if they start to actually license out that technology to other OEMs, similar to what we're seeing on Supercharger, there could be maybe tiers and subscriptions. I think that's the golden goose. I think when you look out into the next 5-10 years, and obviously Kathy talks about this for robotaxis, I think that's where this story totally changes. And that's why I do view Tesla how I viewed Apple in 2008, 2009. You'd come out of quarters, investors would sell it on iPhones, and our whole view is look at what they're building, look at the services. That's the key to the sum of the parts valuation. And you snap your fingers, and here we are at $3 trillion, where a lot of investors thought $1 trillion was never going to happen.
But Dan, you talk about the murky macro picture, I believe is your terminology for it. Elon Musk says the challenges of these uncertain times are not over. Do you think he's going to have to continue to slash prices to spur demand, and at what expense or what cost to margins?
Look, I think around the edges, you can maybe see some rebates, some price cuts, but ultimately, in terms of margins, I think they're flatline. I think flattish, ultimately, they start to rebound in Q4 into next year. Not going to box himself into a corner, Tesla, especially what we're seeing in China. But I believe the vast majority of that's in the rearview mirror. I think demand looks strong. And about the murky macro, our view, this is not calling the stock for the next few weeks. Fed, in terms of worries about, talking the tough talk, even though the white flag, in my opinion, is raised in terms of the end of these rate hikes. I look into 2024. I see a bright green light for Tesla, for tech. I think it's the start of a new tech bull market, in our opinion.
And have we seen the lows for gross margins?
I believe we have. Look, it could have maybe 50, 100 bips, but I think more our whole view is it troughs. And I believe we are troughing. And after the stocks had just this massive move, you'll see those knee jerks in terms of the sell-offs. But I think this is a stock ultimately, as we go into U.S. Open, we're going to have a stock somewhere in the threes, in my opinion.
So as we look ahead this upcoming week, a big catalyst that could really affect Tesla and some of your interest rate sensitive sectors the most is this Fed meeting. This could be the last Fed rate hike. The Fed meeting is on Wednesday at 2 p.m. The press conference is at 2:30 p.m. A couple different ways this can have a very bullish effect on Tesla is obviously interest rates coming down. Now, the bond market really dictates interest rates. Think about it like this. Are you going to lend me money for 5% if you can get that out of a 3-month bond? Well, probably not. So if your 3-month bond, your shorter term bonds, even your longer term bonds, those yields start to go down, interest rates for things like cars and houses also go down. And when interest rates fall even just a little bit in things such as the housing market, you see a instantaneous uptick in mortgage applications. Just the smallest decrease of bond yields and the lowering of mortgage rates spurs a lot of demand. So if this upcoming week, the Fed gives us a it gives us a dovish hike, in which that's basically like the Fed is dovish, saying they think inflation's going down and they're not going to have to raise rates too much anymore. They're obviously going to leave the door open, but if the markets perceive that as this is the last rate hike, well, bonds are going to start falling on that, and that could lead to an uptick in demand for vehicles, for even houses, for things of credit. And this could have a very positive effect on Tesla stock in conjunction with good earnings. If Tesla's earnings were bad, then I think this would be a whole different topic of conversation. Now, at the same time, if interest rates do fall, that should spur enough demand that you won't need to see further price cuts from Tesla. And that's really the reason why Tesla fell. Tesla could have fallen, like we've seen, 10%, or it could have rallied 10%. Based off of Elon's comments alone around future price cuts. And I think some of that could be walked back by the markets. And the markets might start to say, hey, we're seeing lower interest rates, bond yields are falling, Tesla's probably not going to have to cut prices, margins are going to recover, this is great. That is a very real outcome that I could see in this upcoming week, as long as the Fed meeting is a bullish one. And it's good for dropping interest rates. The other thing that I like to consider is obviously Tesla has a lower valuation if you look at things such as the PEG ratio from big tech. Now, you're seeing the NASDAQ rebalancing next week. A lot of stocks like Microsoft and Nvidia are seeing their weightings drop by about 3%. Tesla's seeing their weighting fall about 1%, which is still not the greatest thing, but you could see money rush into long duration assets. Your growth stocks, your Apple, your Microsoft, your names that have done well this year, minus Nvidia, are not growth stocks. They are more value stocks. And Apple or Microsoft is not what you want to be in for exceptionally high growth. It's just not. People are in those because they're perceived as safety. Well, as we get closer to the first rate cut, markets are going to move that money out of your stable big tech names and move it into, well, relatively stable, higher growth big tech names. And that is Tesla perfectly. Mix that with lower bond yields and presumably higher demand for financing a vehicle, and you could see a very bullish next week for Tesla. To the contrary, you're going to have big tech earnings. And if those are not good, well, we could have a big problem in the markets. And it's going to be a busy one. Tuesday is the start of your trillion-dollar company earnings. You're going to get Microsoft and Google Tuesday and after hours. Your trillion-dollar companies are the ones that are really going to move the markets as a whole. That could affect everything. And these are the ones to really keep your eyes on. Now, Meta as well reports Wednesday and after hours. That's also going to be a big one for our markets. So starting off the week, the second day into the trading week, well, you could see things flip to the negative, or things could get really bullish really quickly based off of these big tech earnings. Now, you could also see a rotation. If Microsoft or Google earnings are not so great, well, just like what we seen on Thursday, you could see the NASDAQ down 2% and the Dow up 1%, or just some of your other names doing better than your big tech names. And I think Tesla, in conjunction with the Fed meeting, especially after Wednesday, well, even if earnings are bad for big tech, that could be good for Tesla's stock, considering what we just talked about. But there is that chance that everything goes down the toilets next week. The Fed's negative. Earnings are negative. In that case, there's not much we can do for Tesla. Tesla would be subject to the markets at that point, and whatever the markets wanted to throw at it, which could be a drop of 10 to 20% if earnings are bad. And that would obviously not have a great effect on Tesla. That would, after all, be a gift, so we could buy the dip much cheaper. We are also going to get a lot of economic data this week that you should throw into this equation. that could definitely affect Tesla. So Thursday, you're going to get GDP growth rate quarter over quarter advanced data for Q2. This comes out at 8:30 in the morning. Think recession. If this data comes in bad, everyone's going to be talking about a recession, and that will make stocks fall, including Tesla. The forecast is for 2.2% GDP growth. If this comes in negative, you're really in a problem. If this comes in at 1%, well, you're probably still in a problem. You want to see it come in line with expectations as inflation has been falling really ever since it hit its high. You want to see good data. You want to see the U.S. avoid a recession. Durable goods orders come in at 8:30 in the morning on Thursday as well. You're expecting a 1% increase. Again, you want to see good data. And then on Friday, if that wasn't enough for this week, you're going to get core PCE month over month. You're expecting that to come in at 0.2%. 0.2% is fine. That's 2.4% annualized. If it comes in at 0.1% or even potentially negative, that is perfect. Stocks will rally off of that. Personal spending month over month is expected to come in at 0.4%. You want to see, again, this come in line with expectations. You don't want to see spending fall off a cliff because that's very recessionary, but you also don't want to see it going up 2 to 3% a month as well. That's inflationary. So it's really walking a narrow line with some of this personal spending data and some of the income data. We're going to get personal income month over month. You're expecting that to come in at 0.4%. Think wage price spiral if this comes in anything over 0.7 or 0.8%. 0.4% is fine. That's not a huge problem. That's 4.8% annualized. That's okay. If it comes in lower, that would be better. Not to mention, we are going to have portfolio rebalancing coming on Monday, and that is also going to add to a lot of volatility for this upcoming trading week. Some analysts on financial media have thrown out the idea that maybe the NASDAQ is doing this for a purpose. They're reducing weights in your big tech names literally the day before Microsoft and Google report earnings. That doesn't look very good. And that is definitely a reason why big tech sold off on Friday. But note, Tesla didn't do all that bad. Including the move in after hours, Tesla was only down about 1.5%. That's a much smaller drop than what you've seen on Thursday, where Tesla dropped over 10%. Apple will be reduced from 12.06% to 11.05%. Microsoft will be reduced from 12.74% to 9.8%. That is, alongside NVIDIA, the biggest drops to market weighting. That's about 3% that they are going to lose of the NASDAQ weighting. That could add to a lot of selling for some of these names. Google will be reduced from 7.61% to 5.7%. Amazon from 6.91% to 5.3%. NVIDIA from 7.28% to 4.3%. Another about 3% reduction in NVIDIA. Meta will be reduced from 4.46% to 3.7%, and Tesla will be reduced from 4.44% to 3.4%. So Tesla is seeing one of the smallest reductions of only about 1%, which in the grand scope of these other names is not as bad as what it could have been. So when I look at all of these things logically, there's clear reasons why this week could be a bullish one for Tesla, but there is also potentially a reason why the markets could fall this week. NASDAQ rebalancing, economic data potentially being bad, signaling a recession and a slowdown. The Fed, earnings, all of these things have the potential to be very negative. But if they are not negative, then I expect Tesla bottomed around 255 based off of the intraday move on Friday and the aggressive bounce back towards the end of the day, minus that end of the day sell-off, as a lot of people were panicking that on that NASDAQ rebalancing that's coming on Monday. Hopefully this provided you some context and clarity on what's going on right now with Tesla, as well as the broader markets, what to look out for next week. We will have a full breakdown on all of this in the next video, so be on the lookout for that, as well as let me know down below in the comment section, what do you think about the markets in this upcoming week, as well as what Dan Ives had to say on Tesla on Friday. So that's going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys want to take it a step further and come trade with me live in real time every time I make a trade, come talk to me. You got problems, you got concerns, you're happy, you're sad, just let me know. We can talk about it. Link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.